Hi, my name is Ben Shepard and I'm editor of Global ETF Profits. We're moving into the fall and potential tax changes are looming large. We're looking at potential increases in the capital gains tax rates going into 2011 as a lot of the Bush era tax cuts are going to be allowed to expire. So investors are starting to think about how they can position their portfolios to take advantage of higher yields but hopefully minimize their tax bills. That's generating a lot of interest in master limited partnerships. They tend to be midstream operators in the oil and gas space. Their revenues aren't tied directly to commodity prices since they collect primarily fee-based revenue for moving oil or natural gas from point A to point B. They're not actually in the business of extracting it. That generates consistent revenues and allows them to achieve really high payout rates. So of course they offer very attractive dividends. MLPs do carry a potential wrinkle though in the form of unrelated business taxable income, UBTI, which can be a real problem in tax advantaged accounts like IRAs or 401ks. That's made MLP exchange traded products extremely popular because they sidestep the risk of UBTI, and also rather than receiving a K-1 form at tax time, you just receive a 1099 DIV that everybody should be used to by now. Fund managers have been more than willing to take advantage of that demand. Right now there are 6 exchange traded products on the market focused on MLPs, but until recently they were all structured as exchange traded notes. Basically what an ETN is a debt agreement between a large bank, think of the Barclays of the world, and the ETN issuer, where basically the bank agrees to pay out the returns of an index less a fee. That makes the structure really advantageous in that typically, again, you get the 1099 DIV, and there's usually very little tracking error with the underlying index given the way that it's calculated. Typically, though, you give up a little bit on the yield side. And the other larger concern for a lot of investors is the additional credit risk that debt instrument creates. If for whatever reason the Barclays of the world were to become insolvent and go bankrupt, most likely the holders of the ETNs would walk away empty-handed. You wouldn't have a place in the line in bankruptcy proceedings, so most likely you would not recover anything. While I personally don't see a big risk in Barclays going bankrupt, I just don't see that happening. It is a legitimate concern and a lot of investors just aren't comfortable with that structure. Recently though, UBS eTrax has launched a true MLP exchange traded fund. Basically the fund tracks a portfolio made up of 25 midstream MLP operators. So it's the pipeline operators, the storage tank operators, those sorts of operations. So again, you get that steady fee-based income, the high payouts, very little risk due to commodity prices, and being an exchange-traded fund, there's no credit risk. So this is a product that I think is really going to take off, and already we're seeing lots of assets being amassed. So if you fall in that camp where you want to use MLPs and leverage MLPs for your portfolio, but you just don't want to take the additional risk of an MLP, UBS eTrax Alerian MLP Infrastructure Index. The name's a mouthful. The ticker is MLPI. Again, that's a true exchange-traded fund with no additional risk. It's really very attractive. It tracks the same index as the Alps Alerian MLP Index. Again, it's those midstream operators. But the Alps Alerian MLP Index is an ETN. So basically what that means is both funds, both the exchange-traded note and the exchange-traded fund, are tracking the exact same underlying index. So in terms of price performance, they're going to be very similar. There's going to be a little bit of differential there though because the UBS product assigns different weights to different index constituents, so it's not going to be spot on. But alternatively, I also expect the MLPI, the UBS fund, to carry a higher yield than the Alps Alerian ETN. So if you want a higher yield, you don't want to take on the additional credit risk, you can go with MLPI. If you're more interested in capital gains, you're willing to give up a little bit on the yield side, and you don't mind the additional credit risk, then the Alps Illyrian MLP Index ETN is the way to go, AMLP. Again, my name is Ben Shepard. I'm the editor of Global ETF Profits.